Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, we had a reason to cheer yesterday. We were happy that we started the week on a healthy note. But, that didn't really follow through, right? It was a choppy session. We started on the back foot. We picked up traction. We hit that 24,700 mark intraday, but failed to really sustain those levels. And that was the key concern, right? We've had one-day wonders over the last couple of weeks as well.
True.
But we didn't see follow-through coming in, and that's exactly what happened today, because we've ended even below that 24,500 mark. So over 200-point cut from the day's high. Broader end of the markets, although were relatively outperforming the benchmarks, but still they also ended the day in the red. In terms of sectors, banks have been, yesterday saw good, up move,
True.
but once again fizzled out. Even the PSU bank index, which saw good traction after SBI numbers, they also came under profit taking today. FMCG, real estate, these were some of the pockets that weren't doing all that well. But what did well were the likes of IT, metals, you had auto names doing well, even pharma. That index was up almost 1% or so. The breadth of the market was fairly even, Stevens. I think it was largely
Correct.
tilted in favor of gainers, but I think it kind of evened out at the end of the trade. But in terms of individual movers, then quickly taking you through some names that stood out. Tech names doing well today. Tech Mahindra, even Infosys, HCL Tech, they did well. Autos were doing well. So you had Maruti, M&M, Hero MotoCorp, all these stocks doing well. Aside of that, you also had some pharma names like Cipla doing well, power names like NTPC, even metals like Tata Steel, Coal India, they were doing well. ONGC ahead of numbers, up about 2% or so. What didn't do all that well were the likes of Bajaj Finance, even Trent, HUL, some of these consumption names came under pressure. HDFC Bank was among the top contributors to Nifty's gains yesterday. Today fizzled out. That was in the red. Eternal also has managed to, snap out of its gaining streak. ICICI, Bajaj Auto, Bharat Electronics, these are some of the names that didn't do all that well. But Yatin, lots of movers in the broad end of the markets, and they were either earnings driven or
Correct.
news based.
Yes.
Let's talk about some of them.
Yeah. So, the advance decline ratio was 1:1, and I think as Nandita was mentioning, clearly we had the two-day momentum lost in trading today, but it was probably to do with the expiry of Sensex today. Rather than focusing on the FNO stocks, let's talk about the cash stocks. Sonata Software, clearly that stock moved 14% in trade. JSL and Himadri Specialty Chemicals, which is HSCL, that also moved 5-6% in trade each. What was not doing well is Praj Industries, 7% lower for that one. Sirma SGS and Schneider continue to fall. That pack lost nearly 3 to 4% in trade. When it comes to SJVN, Alchem, clearly the top FNO gainers. However, Astral post the weak numbers was the top FNO losers, nearly 8% down, ending at the day's low.
Okay, those were all the movers from the broader end of the markets. I think even Suzlon was in focus. Yatin, the long-time CFO Himanshu Modi has resigned from the company. Although the stock was extremely flat in trade, ended with a negative bias. But let's talk about the stocks that are on our radar, starting with Hindalco. The stock did see a good boost after it reported numbers, post lunch, but kind of fizzled out. But the stock was anyway under pressure today, given the fact that its US arm Novelis reported underwhelming set of numbers. But talking about Hindalco's numbers first, India business did well. The standalone net profit grew 26%, revenue was up almost 10%, EBITDA up over 14%, margins also came in higher, 12.9% vis-a-vis 12.4% on a year-on-year basis. Both aluminium and copper EBITDA were also fairly stable for the company. But it's the US arm numbers that kind of disappointed. There was a higher tariff impact anticipated now, second quarter onwards. First quarter, they had an impact of somewhere around $28 million, but now that is expected to go up to $60 million, of course, due to Trump's higher tariffs. Now, Kotak Institutional has downgraded the shares of Hindalco to reduce vis-a-vis its earlier rating of buy. Looking at Novelis's number, the brokerage has also cut its target price to 705 from 735 rupees. In fact, the price target and the downgrade has come on the back of results reported which was below expectations on lower margins as well as shipments. Now, Novelis management also expects a larger impact of tariff, as I just mentioned, $60 million from second quarter onwards. Kotak has pointed out that the risk of demand destruction from elevated tariffs is underestimated, and it poses further downside risk to their base case going forward. Now, on the back of tariff impact, EBITDA on an adjusted basis fell somewhere around 17% from last year. EBITDA per ton as well was down somewhere around 18% on a year-on-year basis. But Novelis has told investors in a conference call or in an investor call that despite tariff-related uncertainty and pressures, it is eyeing long-term growth through its Bay Minette plant in Alabama, which is a greenfield rolling and recycling plant, and that will have a 600 kilo ton capacity upon completion. So that's something that they are banking on to drive long-term growth. It has also guided that EBITDA has bottomed out in the first quarter itself, and there is likely to be improvement in scrap spreads and reduction in production costs as well, despite the impact of tariffs, which is why some of the brokerages, I think, have still maintained their buy call on the stock, the likes of Nuvama for that matter. Nuvama has retained its buy call despite the challenges, the tariff-related challenges as well. It believes that Novelis' earnings have also bottomed out, and a revival could be anticipated in the fourth quarter of FY26. Of course, the management is also aiming to reduce costs by $100 million annually, and that will of course improve the financial outlook for the company as well. Citi also has a buy recommendation, target price of 800 rupees, and CLSA also has an outperform call with the target price of 850 rupees on the stock. It expects profitability to remain low for the next 2 quarters, but just like Nuvama, it expects profitability to improve or recover from the fourth quarter. But Hindalco as a stock hasn't really been doing much, has been sideways. Today we did see a sudden pop after the numbers came out, but I think Street will be still digesting the India business numbers, and we will probably see more brokerage notes tomorrow as well.
Yes, brokerage notes will come after the conference call, and more importantly, the overall numbers for Hindalco were better. The India aluminium EBITDA was much better than expectations. However, Novelis clearly disappointed. Whether or not scrap prices and the trade war is impacting Novelis US operations is something that we'll ask the management. But yes, Hindalco clearly volatile in trade after trying to break out in the green 2 times today. The stock ended almost flat in trade.
Right, Yatin, what's on your radar this afternoon?
So one stock we need to watch out for is Hyundai Motors. And in general, auto shares are outperforming this quarter, as well as if you look at the commentary from management post the numbers, they're expecting a smart recovery. Obviously, there is inventory buildup in the marketplace. The demand is slightly slower, but moving forward, 2 things: exports as well as rural demand, and new launches obviously would be helping auto sales to gain momentum. Hyundai Motors particularly in focus today because Goldman Sachs has come out with the initiating coverage note. They like the stock, and they believe that from here on there could be a re-rating on the cards with market share gains for the company. In fact, Hyundai is planning new electric vehicles as well as SUVs that would help them move up the market share. In fact, Goldman Sachs believes that the new products are expected to deliver a total growth of nearly 8% versus the industry growth of nearly 5%. So the industry growth versus Hyundai's growth would be lower. And they prefer Hyundai Motors because they believe that from here on the SUV and export mix would benefit the overall performance as well. They have initiated buy call on the counter with the target price of 2,600. So even from the current market price, they are expecting almost a 15-20% kind of a return.
15 to 20% kind of return, and of course it is expected to lead the recovery in the domestic car market as well. I think in the quarter gone by, the volumes weren't all that great, due to weakness in the India business, but exports did well. But here on, of course, Goldman Sachs believing that Hyundai Motor will be leading the recovery that the domestic car market or industry will be, going through later on. But of course, that was about Hyundai. But let's talk about Astral. That was one of the stocks that got badgered in trade today. Yatin, bad set of numbers. Revenues down almost 2%, EBITDA 14%, Profitability also came under intense pressure, 34% down on the profit front. Margins also contracted almost 200 basis points. So yes, street clearly, punished the stock for downbeat numbers. In fact, if you look at the plumbing business, the margins there contracted 150 basis points. Paints and adhesives, that business also saw almost a 300-point contraction in margins. But talking about the management commentary, they've said that the overall demand scenario in the polymer industry was weak in the first quarter, and PVC price volatility resulted in inventory losses, as well as realizations were also impacted because of that. PVC prices have been settling down since the beginning of the second quarter of FY26. So, which is why they believe that in the coming quarters there will be some bit of recovery, and they are already starting to see some improvement in the market conditions as well. But the company is also made a new acquisition. In fact, it has approved a proposal for acquisition of 80% equity share in Nexlon Chemicals, and with this it will foray into manufacturing key material CPVC resin. So, and this the management believes will help them in cost optimization and margin improvement over time as well. But Investec has downgraded the stock to hold from buy, and has also cut its target price to below 1500 rupees at 1480 rupees vis-a-vis 1540 rupees. It is concerned over this recent, in fact over this new acquisition of the company. It says that if the company fails to execute on this front, trading multiples will be at risk, and which is why it has cut its EBITDA estimates for FY26 and FY27 by 7% and 2% respectively. So, it has to really prove itself when it looks at this foray CPVC resin manufacturing, because if it fails to execute on that front, clearly earnings will take a hit, which is why there has been an EBITDA estimate cut by Investec. But yes, today wasn't such a great day. Management is hopeful because it has started to see improvement in market conditions, and PVC pricing also settling down, which of course was one of the reasons why numbers have been so bad.
Yes, and I think Q1 typically is volatile for all of these companies, and yes, the PVC resin prices also played a role. Even Supreme Industries, which is into a similar business segment, has faced headwinds during the Q1 results. Let's see how the real sector shapes up, because valuation wise I think Astral trades at nearly 60 times plus. So yes, valuations are expensive, and any kind of disappointment clearly translates in the shares falling by 7, 8%, 10%.
Yeah.
So yes, that's what exactly is happening with Astral.
That's true, Yatin, and those were all the stocks on our radar this afternoon. But aside of that Friday meeting between Trump and Putin, there isn't much by way of cues really to watch out. Yeah. Today, of course, we have inflation data coming out, both domestically and in the US. Domestically, we are expecting, or the street is expecting, sub 2% inflation numbers, multi-year low. And for US, the CPI figures will be important, because next month's Fed meet, we can see a rate cut if the numbers edge up as well. So yes, inflation data will be in focus. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Of course, we'll see you tomorrow with the markets at 9 AM. Don't forget to tune in and have a great evening as well.